What's going on, traders? Andrew O'Connell here with Pristine Capital. Welcome to our market recap video. It's June 23rd of 2022. We just got a really nice rally in the growth stocks. Let's dive in. I'm super excited, and let's talk about the markets. As always, nothing in the video should be construed as investment advice or recommendations. Don't YOLO yourself. Let's talk about our box scores. S&P 500 finished out the day up 0.98%. We had the NASDAQ QQQ up a cool 1.49%. Our IWM small caps were up 1.2%. The dogs of the Dow were a big time lagger. They were only up 0.7%. And then our ARK Innovation ETF, which I am still long my 2023 calls, was up a whopping 7.1%. Take a look at all these closing ranges. Pretty much all these indices closed at the very top end of their day's range. Volatility, however, was a mixed board. You can see the VIX was actually up 0.35% into this S&P 500 rally. That is a bearish divergence. That said, our breadth overall was positive. My trend model remains at a +1. And we did finish out the day with 51.7% up volume. As always, we've been going through this crude chart because this crude chart holds the key to the next CPI print. So this is how we can see the future, team. Crude oil, as of this recording, is down 9.28% for the month of June. For the month of May, it was up 12%. That's why the inflation number was so hot. But this number at negative 9.28%, and there only being a few more trading sessions left in June, that means our next inflation print is likely going to be a big old deceleration. And what's going to perform the best if that's a deceleration? The growth stocks. So you can see, smart money, if we're watching this stuff, they're watching it too. They're acting on it. Usually you just see it as like, oh, why is ARK up? I'm going to trade it because it's the strongest, but I don't really know. In this case, we're pretty much on the same page with the smart money in terms of looking at this inflation data. Finviz heat map, you can see we had nice strength throughout the day, and we had energy, which was our weakest sector. So that's exactly what we want to see as commodity prices come down. That reduces the inflationary pressure, and that also reduces the Fed hawkishness and increases the dovishness, which is exactly what we want, really. Sectors, biotech remains in our top momentum slot, team. So we're going to take a look at a few charts towards the end of the video. Biotech up big, 6.18%. The ARK Genomics Fund up 8.34%. And the ARK Innovation ETF was in third place. These are the areas of the market that are now in our top momentum slots. So remember when everyone was like making fun of Cathie Wood, like, oh my gosh, she's horrible, she's going to blow up? That's likely exactly where you wanted to be buying the ARK Innovation ETF. KWEB is in our number 4 slot, still looking good. Then solar stocks. So this is a completely different configuration that we're seeing, where the most risk-on areas of the market are rallying the hardest. And then as we look at the bottom of our momentum list, we see energy. It's now in our bottom slot, and that's what was leading the market for the entire first half of the year. We've got cannabis stocks, we have material stocks, also part of that inflation trade. And you can see semiconductors as well, which did really well in the last bull market. Style factors, growth was up 1.75%, followed by Minvol, which was up 1.62%. For common stock, I did not do any trading today. So that's the thing, for most traders and investors, and not most, I guess, most of the punters out there, they're looking at a day like today where the market was up, the growth stocks were up, and it's like, oh my gosh, what am I buying today? Like, I need to be buying. Every time the market's up big, I buy big, and then every time it's down big, I sell big. And you want to make sure that you're following a more coherent process than just what was the last hourly candle and I'm using that to buy or sell. So yeah, I did not have to put on any new exposure today just because I was already in position to take advantage of this move. Trend model still at 1. Take a look at the S&P 500. I know this has been frustrating for many. We're really just carving out a base here, but we did finish out above this 5-day EMA. We're starting to approach that 10-day EMA, and then we have this monthly value area low at 3888.25. And this hourly chart, it's important to take a look at this because we have really just been bouncing around inside of this weekly value area. And you can see over the last 2 days, we're beginning to just hang out a lot more towards the upper end of the range. So take a look at this. We had a first test, second test, third test, fourth test, fifth test. My baseline assumption is that at some point, we're going to keep testing this thing and we're going to break out to the upside. Let's take a look at our NASDAQ. We're going to see something similar, and the NASDAQ is doing a little bit better than the S&P 500 off the lows. So the NASDAQ is more duration sensitive. Approaching this bottom of value, looking pretty solid. Russell 2000 is looking on the weaker side compared to some of these other indices. You can see not quite yet at that monthly value area low. And then the dogs of the Dow, they're just not really looking so good. It's primarily value stocks, but overall, I mean, who am I kidding? Pretty much all of these index charts look almost identical, except for the ARK Innovation ETF. Take a look. This is where I bought my leap calls, right over here. I went in with the expectation, hey, this might take a while. I'm in this for the long haul, bought these out to January. I think at some point these inflationary pressures are going to abate and we're going to get a rally. So it's not like this is like an overnight winner, like, oh my gosh, I put it on, then an hour later I was killing it. Yeah, for my style, which is swing trading, sometimes if you have a strong view, you're gonna have to wait a month, 2 months, 3 months, God forbid, to get paid on your trade if it ends up working. So I actually like what ARK is doing here. We're just kind of forming a nice base. And now we're back above that 20-day simple moving average. And we're starting to approach that monthly value area high. So yeah, I like what's going on. And we are starting to see, let me just go over to my options trades. The one trade that I did today, this was it. My limit order hit. I closed out a third of my DBC October 21st 28 strike puts for $2.15, excuse me. I'd paid $1.73. And this was, this is my only short trade I have on the books. I'm short commodities. When I put these on a couple weeks ago, I made sure to size them pretty small because for all I knew, commodities could have just kept ripping. But sizing smaller on the options trades, it prevents you from, every day looking at the position and going crazy and all that stuff. I imagine if I had sized that thing bigger, I probably would have stopped out. So yeah, pretty pumped. Still holding on to that commodities short. And take a look, the commodities, they're looking pretty weak. The trend, basically, it's a complete trend break that's going on here. Below the 20-day moving average, below the 50-day, and now we're tagging this bottom of value. And the commodities, they tend to move in these boom and bust cycles. So that's why I'm still holding 2/3 of my short. Who knows, maybe we get down to this VPOC down at 25.68. And let's look at energy, this XLE ETF. Look at this, we're approaching this downside VPOC and we're approaching the 200-day simple moving average. So the crude oil trade, or like the energy trade, it is just completely unwound very quickly. So look at this, in the beginning of the year, this is where we got the breakout in January. This XLE ETF was at around like $61.67. So if you were early on the breakout, you're still up money on your energy stocks. But if you were late to the party, you're pretty much like you got stopped out, or now you're bag holding, that sort of thing. All right, let's take a look here. We'll jump over to some of these areas of the market. They're just starting to show some relative strength. Solar stocks, you can see it back above that 20-day simple moving average and approaching the 200-day simple moving average. And my dog in this fight is Enphase. Enphase is one of my core options positions, and I'm long some August calls here. And Enphase also looking very solid. Chart looks almost identical to the solar ETF. Enphase is one of the largest positions in it. Let's take a look at some other names that were moving to the upside. Roblox up 10.8% out above the 50-day simple moving average. We had, what else? Snow. This was a big mover for today. And look at this, out above the 20-day simple moving average, out above the monthly point of control. Now, this is a huge paradigm shift with these growth stocks. Remember, they were in downtrends for literally a year and a half. So if you feel like, oh my gosh, I missed the move, this is awful, you always want to make sure that you have good trade locations, so don't enter something that's very extended. But I believe the move is really just beginning. Like, to be honest, my entries on these could have been, a little bit early, but I feel comfortable that I have a strong foothold in a bunch of the names I want to be long. So like Global E is one of my biggest positions. This one out above the 20-day simple moving average, looking very similar. DigitalOcean, this is another one of my longs. This is my biggest position, out above the 20-day simple moving average. So yeah, I'm pretty much covered within this space. And again, like, if you've been watching these videos, it hasn't been just like a straight line up. There's been a lot of back and forth because like we saw with the ARK Innovation ETF chart, it pretty much bottomed out in May, but it was a very choppy bottom. So it's important, like, for me, I was like, hey, this could be a really big potential bottom. I'm just gonna sit in here and I'm not gonna care if we chop around for a month as we hammer out this bottom. Because what could certainly happen is like you try to be too cute, try to day trade around it, you try to stop out, stop in, and stop out and stop in. You can end up missing the move that way. So for me, it's like, I'm a swing trader. I'm not high flying day trader scalping the 5-minute chart or anything like that. And then let's leave off here our crypto assets. They are, not putting in a bottom by any means, but they're starting to stabilize, which is a great thing. So yeah, we're definitely seeing a couple of positive elements today, and we have improving seasonality into July. So my bias remains, trend model's positive. I'm getting good feedback from the stocks that are in my portfolio. And so yeah, I just want to keep pressing ahead as stocks move in my favor. I want to start moving my stops up to break even. On a lot of these trades, my stop is already up at break even. But yeah, I just want to stay the course as I see relative strength. If I see any of my names don't look so hot anymore compared to other names that are breaking out, potentially make a substitution. But overall, in a pretty good spot heading into Friday. With that being said, that about does it for this market recap video. Hope you all had an awesome trading session. And as always, I'll see you all tomorrow. Have a great night, everyone.